Hello and welcome to State of the Economy. So today we thought we'll discuss the October to December GDP, quarterly GDP data which came last week and which kind of stunned everybody, because that was a period when the effects of demonetization, Notebandi, which was announced on 8th November, it is that quarter which really felt the brunt of demonetization, and we all know and we have all experienced that consumption in that period really sort of declined, which is visible even in the data provided by a lot of consumer companies, fast moving consumer goods companies, and even we ourselves experienced that we were not during that period, because of psychological reasons, we were just holding back those extra bit of consumption that we might have done. This period also shows an increase in private investment, a kind of decent increase. In fact, consumption doubles during this quarter compared to the quarter in the same previous year. So, what exactly happened and how did GDP numbers show up at 7%? Really no significant decline during that period. To discuss that, we have a special guest today with us, Dr. Pronab Sen. Why we have Pronab Sen in our studios is because he has been dealing with India's statistics, national accounts for the longest time as Chief Statistician of India, as also Chairman of the National Statistical Commission. So he is one person who really who can, if I may use the term, who can really smell data. And he understands data like probably no one else that I know. So we thought we'll have him to explain to us what the hell is going on. Welcome to the show, Dr. Pronab Sen. Now, just tell us exactly what's your take on the GDP numbers that came for October to December quarter. I read one statement of yours which we also carried in the wire, where you said that probably the informal sector, which has really borne the brunt of demonetization, is not being calculated, or we don't have yet means to calculate the informal sector growth or output accurately. We take formal sector as a proxy and then just project it onto the informal sector. Anyway, that apart, please tell us how do you see these numbers?
Well, you know, one thing is you have to accept right up front is that on the quarterly GDP estimates, we have no data at all on the non-corporate sector, non-formal sector. All the data we have comes from there, or it comes from government. Okay?
Either corporate sector or government.
Yeah. Now, the way...
And corporate sector, because of the registrar of they all register and give all the data there, is it?
Even in the corporate sector, it is not the corporate sector in its whole. It's actually the bulk of the data comes from the listed companies, which is a very small set of the larger corporate database. Corporate database is about 9 million units, whereas here we're talking about 32,000.
What about ROC, Registrar of Companies, recording all the unlisted companies?
That will come, no, unlisted companies data will come only when the annual accounts are closed. The listed companies by SEBI regulations have to submit quarterly accounts. So those are the numbers that are used. Okay. So we are not only talking about the corporate, we are talking about the larger corporates. Okay. So that's number one. So the quarterly estimates are essentially reflective of what is happening to the larger companies. And then it is assumed that the growth behavior of these larger companies are similar to the growth behavior of the small. And so you use the same growth rates to blow up the figures of the smaller companies. So this is the pattern. Now, therefore, if you really look at this data, what the data would be telling you is that the large companies have done reasonably well. The problem, of course, is a lot of large companies saying that we aren't doing well. The automobile companies are saying,
like Hindustan Lever is saying,
so they're all saying, but we are not doing that well. But There are two things I think we need to take into account. Number one, when Notebandi happened, a lot of us were forced to switch our purchases from the local rediwala or the local small-time shopkeeper to the larger units who were ready to accept credit cards.
Yeah.
Right? All of us did that. The Indian middle class, by and large, who had access to debit and credit cards, they switched from paying out in cash to wherever credit was accepted. So there could well have been a shift in demand from the informal sector to the formal sector. And then, of course, the informal sector itself got badly impacted.
Is that showing up as higher consumption? 10%
So
growth?
no, that's only one part of it. And this would not be, I think, large enough to show that kind of growth. Yeah. The second thing that happened is what a lot of companies did is that they sold their inventories to their dealers and retailers in return for cash. Okay, and this
you mean cash as in 1,500 rupees? Yeah?
1,500 rupee notes,
okay.
The old notes.
Okay.
And this cash was used to pay off the taxes.
Okay.
Okay, both advance tax as well as excise duty.
Okay, advance tax in December or something, right?
Yeah. So what was basically happening is that they were pushing out their inventories and taking back the cash that was being held in the distributorships. Now, in terms of the company figures, therefore,
so 1,500 rupee notes got converted into inventories with dealers.
With dealers.
Okay.
So instead of buying gold and silver, they were essentially buying inventories.
Which means the dealers won't buy for the next few months if they're stocked up.
If they're stocked up. So, but in terms of the books of the company, this is shown as a sale.
Okay.
Right? So that's what's really, I think, pushing it up.
So are you saying that this quarter and next quarter could see a slightly flattening out?
This quarter will almost certainly see a flattening out because dealers are not going today. That incentive that you're getting rid of your cash costlessly, that incentive no longer exists. So the dealers will now wait until the inventories come down before they place fresh orders on the manufacturer. So the actual production effect, I think, will be felt in this quarter, in the fourth quarter.
Okay. So, do you also feel that that some companies may have pushed, smaller companies may have pushed some of their sales or backdated some of their sales? Shouldn't that lead to the opposite effect? Is that also possible?
Well,
backdated means from November, if they do it to October, then it will show up as sales in this quarter, right?
Yeah, it will show up. We know that doesn't matter. I mean, look, the bulk of this transaction really was driven by the amount of old currency that needed to be handed in. And
but there's a statement by your successor, the Chief Statistician of India, T.C. Anand, where he sounded a cautionary note saying, please don't take this as a final number. More information will come next year, and especially on the demonetized, the period of demonetization, and then we may review the number. What do you make of that?
Well, he's absolutely right. First of all, as I said, we are using the SEBI database. Now, there is a cutoff date by which whatever has been submitted is then used for these calculations.
Yeah.
But there are companies who submit their accounts even later. So those would be taken into account. So you would get a larger sample to work with. So that's one big thing. Second is that you would have the full index of industrial production. Third is today the only thing you have for the Rabi crop is the sowing.
Yeah.
Okay? You'll get more information on that. So things are going to improve, the data flow. Then next year, you will get the full Ministry of Company Affairs database, which covers this 9 million companies I was talking about. So that's the big data change.
Okay.
But that will come only early next year.
That will come only next year.
Yeah.
Okay. Tell us, Dr. Pronab Sen, this when this methodology changed for GDP calculation, where we shifted to gross value add, and then we we started grappling with what measure of inflation do you judge. So somebody said GDP deflator is the best measure to see to calculate whether which way gross value add is moving. Can you just in simple terms explain to our audience what is this change of methodology and how is it impacting our GDP calculation? Because that's of course it's not strictly linked to demonetization, but it's a problem which pre-exists demonetization, but it may sort of create problems in future in calculating what happened during this period also.
Okay. The big change is that earlier the data that you would get is on production.
Okay.
Okay. You didn't get direct data on the value added.
Okay.
So what you did is you, on the basis of past data, you estimated the value added per unit of production.
Okay.
And then you multiplied the production data by that ratio.
So output was the main.
So output, physical output was the main measure. And then you multiplied that by an estimate of value added to get the total value added. Now you're getting data directly on the value added itself.
Okay. How?
From the company accounts.
So
from the profit and loss accounts, you know what their value of production is, you know what their purchase of goods and services is, the difference is your value added.
Okay.
So you're getting it directly from the financial accounts.
Okay.
So in terms of accuracy,
it's much more refined.
This is much better. Okay? Because you're not making assumptions on this value added to production ratio. Okay? Now, the point is that this is a good measure, but it is a good measure only at current prices.
Okay.
The problem is how do you bring these to a constant price term?
Okay.
Right? In the earlier thing, because you are using the physical production, you didn't have a constant price problem per se.
You don't have a price problem because it was a physical unit.
You do have a price problem in converting the constant prices to the current prices.
Yeah.
So you have to multiply by.
Okay.
But here you're taking the current prices, dividing by a price deflator.
So you have to deflate that by the
by a price index.
Okay.
Now we have two main price indices in the country: the wholesale price index and the consumer price index.
Yeah.
Different parts of the economy you use different indices.
Yeah.
Right? The GDP deflator isn't an index by itself. The GDP deflator is you are using WPI or parts of WPI, CPI or parts of CPI to do deflation of different sectors and different products.
So deflator covers the broader sector.
So then you add
sector.
all of that up and that gives you your GDP deflator. So the GDP deflator is a derived figure rather than a number that you have upfront.
Okay. So, so one problem with GDP calculation was that there was a WPI wholesale price index and consumer price index inflation were very divergent.
That's right.
So wasn't that the key problem?
No, that was not the key problem.
Okay.
You know, you can argue back and forth about what is the appropriate deflator, whether you should use the CPI or you should use the WPI. Okay, that we can debate. But an expert group has gone into this and they have recommended that for these sectors you should use WPI and for these sectors you should use the CPI.
You were part of that expert group, right?
No. This is completely independent.
Independent. Okay.
This is independent of government.
But it happened when you were the chief statistician of
It happened
India.
even before my time.
It happened before you.
So it's been around for the last 20 years.
Okay.
Now that's fixed. And the CSO does not tamper with that unless the expert committee tells them that no, now you have to change it. But that's not at the heart of the problem. The heart of the problem is really within the WPI. What is happening to the prices of finished products and prices of inputs like raw materials and intermediates? These two matter a lot. Now, what we do know in India, for instance, is if you look at the prices of raw materials and intermediates in India, it's very, very closely correlated with what's happening to global prices. Okay, because this whole basket is dominated essentially by oil, and some minerals.
So that's why when oil prices kind of halved, the GVA went up, gross value
That's
add
right,
went up.
because the
input
price crashed.
So by the same token, if these recover,
the GVA will get depressed. So if you have the input prices growing faster than the output prices, then GVA will be underestimated.
Okay.
And if input prices are growing slower than output prices, then GVA will tend to be overestimated.
Overestimated.
Yeah.
Okay. So tell me, from we're coming back to now the period of demonetization. The heart of if I may say so, crux of the problem, which you brought out very succinctly, was the informal sector is not being, or there's no way probably we can calculate the informal sector accurately. And when you just take, if the formal sector is doing well, you take that as a proxy and you project it onto the informal sector.
That's right.
Which may go totally wrong, because there are times when they may diverge, you said, right?
Yes.
So especially in the period of demonetization, the divergence between informal and formal
was very large.
Would have been rather large.
Very large.
So isn't that a major flaw?
It is a flaw, but the point is that you cannot allow CSO to take a call on this. Okay? Because the way good statistics are done is that expert committees lay down the rules and the methodology, and the CSO has to follow those with no deviation.
Okay.
They cannot apply, and they should not apply the judgment, because if you do, then the
you
data,
think another committee, another expert group should go into this?
There's already an expert group.
Okay.
See, there is a standing committee. It's called the Advisory Committee on National Accounts. It's already there. If CSO wants to do any change in the methodology, or if it wishes to change the data that is used, it must take a proposal to this committee, and only if the committee approves it can CSO do it. Now, in this particular case, the CSO didn't have time.
Okay.
So CSO has done what it is expected to do, which is use the same data it was getting earlier, use the same methodology that it was getting earlier, and they had to, in essence, ignore the knowledge that the formal sector and the informal sector had been impacted differently. They cannot take it into account.
But then they could have, if not the CEO, at least, if not the CSO, at least the government could have added this caveat that this is subject to a more refined and comprehensive calculation of the informal sector output.
You know, in a sense, the chief statistician, I think, did hint at it. You know, the quotation you just made. I think he was essentially hinting at precisely this problem.
That we will have more information later.
We will have more information. We're going to change this.
I think he was hinting at the informal sector.
Yeah.
So, what more information can you? You've been a chief statistician so many years. What more information can come
on the informal sector? The only data that you get is employment data, which the Labour Bureau puts out.
Yeah.
Now, from that you get some indication as to what has happened to employment in the informal sector. Okay, and then you use that information to re-estimate the informal sector production.
Employment data has been declining, right, in the last 2 years?
As
per the 8 Industry Labour Bureau data?
No, not really.
Because 2015 showed a 60% fall compared to 2014-15. Especially the 8 Industry Labour Bureau data.
No, the 8 Industry thing is different. You see, the 8
this is different. You're talking about different one.
No, I'm talking about different one. They have a full annual estimate of employment.
This is different. This is the 8 Industry.
This is the 8 Industry,
which was started after the 2008 crisis, global
remember, the 8 Industry again relates only to the organized sector. It is only companies having more than 10 workers.
It's organized. Yeah, textiles, IT, ITES,
That's
etc.
right. Yeah.
Because I was in Mirzapur, which is a carpet hub, just few days ago. I was there to cover elections, UP elections. And Dr. Sen, I found invariably the carpet weavers who were doing 4,000 carpets a month with some 30 odd employees before demonetization are doing just 2,000 and with half the number of employees. This story gets almost like repeated across the board. There is a halving of carpet production, and you could, if you go across to say the Pital brass industry in Moradabad or similar handicrafts, you see the story get repeated. Even now, 40% of the brass, Moradabad brass units are shut. People who manufacture. So this is what actually worries me. I mean, are we completely in denial? And politically also, this was the 7% GDP when it came. The next day, Prime Minister was addressing a meeting at Deoria. I was there in that meeting. And he cited this example that economy is fine, GDP growth is coming at 7%. So is it, I mean, to some extent, living in self-denial that nothing has happened, no negative impact has occurred?
Maybe self-denial, but it could also be a self-goal. Because you think about it, at the end of the day, these numbers are only a snapshot. They're a photograph, right? The lived reality is what your carpet maker or your brass fellows. So think of a situation where you say, the country is growing at 7%, and this guy says the country may be growing, but look at me, I've gone down by 50%. So the difference becomes even more stark. So, I don't know how this will work out in people's minds, saying, look, I am bearing a cost where the rest of the country is doing so well. So, I don't know.
What would be your estimate of, gut feel about GDP? Because a lot of people, I also find that a lot of investors, domestic and global investors, do not believe that we are growing at 7% or 7 to 7.5%. They say that, even Raghuram Rajan, if you remember, said that the experience of the ground does not suggest 7.5%.
Well, let's accept one fact, which is, if you're thinking about the investor community, they have already put their money where their brains are. Right? The stock market has grown more than anybody had expected it to grow.
Yeah.
Even during the demonetization period. Now, the fact of the matter is that the company's books look good, and people are investing there. And remember, all of
but the earnings growth has been like inflation adjusted has been average. If you take the whole universe, listed companies, it's close to zero. The growth of the turnover growth, inflation adjusted.
Yeah, you see, this is the point. Turnover growth is low, but the growth of the operating profits is very high.
But the profitability is going up.
Yeah.
Why do you think that is happening? Is it because of input prices coming down?
Well, partly input prices. That was true till last year. Then input prices this year have been going up since 16, 17. So that effect is wearing out. Plus, as I said, that if they've started hiving off their inventories onto the dealerships, that shows up as profitability on their books.
And finally, Dr. Sen, what about the investment story? The quarterly data also showed a pickup in private investment, and all previous quarters have shown quite a precipitous decline in private investments, and this reflects pretty starkly in the data for gross fixed capital formation, which is really down by 3-4% of GDP over the previous year. So how do you look at that?
Well, same thing. You're not measuring investments directly. Okay. In the annual estimates, yes, investments are measured directly from the company accounts again. But what you are doing in the quarterly estimates is you are taking, fixed capital formation has two parts. One is construction, and the other is plant machinery.
Machinery, okay.
The first part you estimate by using the production data of steel and cement. And the machinery, you use the production data, the IIP, for capital goods and imports of machinery. These are how the two are calculated. Now, supposing the steel and cement guys have done exactly what all the other manufacturing people have done, which is they've taken their stocks and put it into their dealerships. It will show as high growth of sales of
For in that period, yeah.
in that period.
But it will flatten out later.
It will flatten out later, but at that period it shows a high growth, which you then interpret as a high growth in construction. And
So that means we'll have to see this quarter and next quarter data.
The next quarter.
Really figure out what's happening.
that's right.
Thank you very much, Dr. Pronab Sen, for talking to us and clarifying some of these issues which are troubling us for a long time. That's all we have in this edition of State of the Economy. We'll be back with you next week. Thanks for watching.